Dzień dobry Państwu, nazywam się Grzegorz Nowacki, na co dzień jestem zastępcą redaktora naczelnego dziennika Puls Biznesu, a dziś mam niezwykłą przyjemność poprowadzić panel Polityka inwestycyjna w dobie niskich stóp procentowych, nowe wyzwania dla ubezpieczycieli. Tak się złożyło, że organizatorzy, wymyślając tytuł panelu, w zasadzie dokładnie powiedzieli, o czym on będzie. Bo mamy taką oto sytuację, że od dłuższego już czasu na świecie, w Europie, w Stanach Zjednoczonych, do pewnego stopnia również w Polsce, stopy procentowe są na niskim lub bardzo niskim poziomie. A to, co cieszy wszystkich tych, którzy spłacają kredyty, jest nie lada wyzwaniem dla branży ubezpieczeniowej. Mamy bowiem taką oto sytuację, że gros wyniku ubezpieczeniowego, jak wiemy, jak doskonale Państwo wiecie, pochodzi z działalności lokacyjnej, z inwestowania. W sytuacji, gdy te stopy procentowe są niskie, ten wynik z inwestycji jest trudno uzyskać wysoki, a to powoduje presję na wynik finansowy. Drugą konsekwencją tego samego zjawiska jest to, że ciężko jest zaproponować produkty inwestycyjne, które będą miały atrakcyjną stopę zwrotu dla klientów, w związku z tym nie jest łatwo ich namówić do kupienia. I o tym to tylko dwie najprostsze konsekwencje tego zjawiska. O kolejnych będziemy dyskutować w trakcie dzisiejszego panelu. Postaramy się także znaleźć receptę, co zrobić w takiej sytuacji. I oczywiście nie będziemy mówić o tym, jak zmusić banki centralne do podniesienia stóp procentowych, bo choć obserwując Państwa wczoraj wieczorem, miałem wątpliwości, że niektórzy z Państwa byliby do tego zdolni, to jednak dzisiaj skoncentrujemy się na tym, co mogą zrobić firmy ubezpieczeniowe, żeby odnaleźć się w środowisku niskich stóp procentowych oraz jaką rolę i czy jakąś rolę ma do odegrania w tym nadzór. Jako dziennikarz mógłbym tak gadać i gadać, ale to byłoby kardynalnym błędem w sytuacji, gdy mamy tak zacnych panelistów, w związku z tym nie będę przedłużał, a o otwarcie panelu chciałbym poprosić pana Karla, dyrektora generalnego działu konsultingu i badań ekonomicznych Swiss Re, który opowie nam, jak to z tymi stopami procentowymi jest. Tak?
Good afternoon. Thank you for the introduction. And thank you for inviting me to speak here today in this great country. My only regret about coming is that I don't have more time to stay and enjoy your lovely weather and countryside. So I have to fly out tomorrow for meetings tomorrow. So let me get through to the interest rate outlook and challenge. I will be introducing the topic. And we still have to get this thing working right. There we go. I'll be going over the global outlook, risk in the history of interest rates, the insurance penetration in Poland, how interest rates affect insurers, and how we can deal with that, as well as some conclusions and scenarios. Global outlook and history. So just to give you a feel for Swiss Re, we do an outlook for the economic global economy, what we're thinking at this time. The U.S. seems to be doing quite well, had a weak first quarter, of course, with the weather that was pretty terrible in the Northeast in particular, but it's coming back very strongly in this quarter. It should be a good year for growth in U.S. Europe is growing now, much better than shrinking like last year, so we're getting a better growth in Europe, and that's particularly important on the western side for Poland, of course, because of the exports that you do to the rest of the European Union. Chinese growth is about 7.5%, and they're managing that quite well and carefully. So we do expect the Chinese to do in the 7% range growth this year, which is good for global commodities as well as global growth. Now termed to be about the largest economy in the world on purchasing power parity, but certainly the second on market rates. The emerging economies have been struggling with the tapering that's been happening with the Federal Reserve, moving from very, very loose monetary policy to just loose monetary policy. But that seems to be working out pretty well. But in this kind of fragile state of the global economy, we'll see low interest rates for at least another year, and perhaps well into 2016 for the European Central Bank. Our expectation is they really won't raise rates until early 2016. U.S. in early 2015. Inflation risks are on the property casualty side. We worry about inflation, but we don't expect much inflation given all the global excess capacity on labor markets as well as manufacturing sector. So not a lot of that inflation. We're trying to get it up, of course, in Japan. So that's happening. The risk that we worry about is a stall in the European growth. This would particularly come if we had a disruption in Ukraine, so we're encouraged by the remarks of Putin last night. So hopefully that'll work out, but that's a great issue for the European economy, and therefore would be very important for Poland also as part of the European Union. China's debt problem is an issue. It's very high and rose very rapidly. So we hope we're getting escape a hard landing in China. The global monetary tightenings have disrupted emerging markets. They've had exchange rate movements, interest rate movements, fiscal issues from the change in monetary policy in the U.S. And of course, you always have to worry about an oil price shock. On the interest rates have been falling for quite some time. You may have noticed it even here in Poland. So we have much lower interest rates than we had 20 years ago, 10 years ago. They have risen a little bit in the U.S., also a little bit in the Deutsche, in the German bunds, but not much. So we're still struggling with these investment yields, and we'll struggle with that, these low investment yields for at least a couple more years because of the fact that we have a large book of fixed income assets, and as those roll over, we have to reinvest at low rates. So it's going to be a few years before we get a turnaround in our investment yields. Only good news is we look way back in time, and post-World War II, we had a similar situation of very low interest rates for quite some time, and the insurance industry survived. So that's, we'll get through this, but it will be a challenge on the profitability. In our outlook for the global economy, we have the Federal Reserve moving first early next year. Long-term interest rates or 10-year yields in the U.S. go to 3.5 or 3 end of this year, and around 4 3/4 by the end of 2016, which we figure is about equilibrium in the sense that it's about equal to growth plus inflation is what you usually get on a 10-year yield in a stable economic situation for a country. Be about 4% for the German Bund because of lower growth and lower inflation. Tapering end this year, rate hikes next year. Yellen is very similar to Bernanke for those that are worried about that kind of issue. And we think that growth will get very strong in the second half of this year, pushing up U.S. rates. Of course, U.S. is a global reserve currency, so we tend to watch that. That's why I talk that so much about it. For you, of course, the European Central Bank matters. We don't expect that move to come until early 2016. So we have a long wait for higher yields in the insurance sector. The Polish economy has done very well in this cycle, missed the downturn that everybody else did. You see in red that big drop in the Central and Eastern Europe economies on average in the bar, but the red line is above positive. It's about 2% growth and doing it quite well in a couple years after that. A little weakness last year, but still with the average. So growth is going to do well here. We expect that to continue unless there's some disruption of those risks, particularly the Ukraine issue. And Western Europe is coming back, and that'll help boost growth and exports. The challenge, we have potentially volatility for you and your country with the interest rates because of this pension takeover by the government. It takes a lot of demand out of the market for your long-term interest rate securities. Also, the Ukraine is an issue. Gas disruption would be an issue, but less of a problem here than for some of the other countries dependent upon Russia for gas. And a policy error, something going wrong, a bank collapsing in a major European economy would pose a problem from perhaps weaker growth and therefore less exports for Poland. Just to show you where you are as an economy and the insurance industry, I've got a couple of slides quickly I'll go through before we get to the interest rate challenge. And that is Poland is in the Central and Eastern Europe economies, not only the largest non-life premium country, so close to about half of it, around the 10 billion range in the life, 9 or 10 billion range in the life side, but the highest penetration rate. But look at how high you could go. The industrial economies have a penetration of 5%, penetration rate being total premiums divided by nominal gross domestic product, GDP. So you have plenty of potential for growth there. And likewise, even more so in the non-life side, again, about 10 billion in US dollar term premiums, but you're the largest in this area, in the red, and I'm sorry, Russia the largest, Poland the second largest there in darker red, and it's just below 2%, but look at again how far you could go as you develop as an economy, or just to get up to the global average of 3%. So now into the crux of the issue that we're going to be discussing as a panel later today. If you look at just on the accounting side, what differences it makes for the general accepted and accounting principles, GAAP accounting. In GAAP accounting, you don't discount your liabilities by interest rates. So when interest rates go down, your assets go up in value, but your liabilities do not go up in value, so you get a big shareholder increase. And this shows you the, for a 100 basis point increase, how much your assets go down for the global primary insurers and also for the large reinsurers. So about 10% drop in your, for a 100 basis point move, 10%